Hello and welcome to the channel. In today's video, we're going to be talking about how to audit accruals. We are going to focus on accrued expenses. Before we get into the video, if you're not subscribed to the channel, kindly subscribe and remember to like this video for the algorithm. Thank you. So let's get into the video. So here we have our working paper, okay, for the accruals. And when we are talking about accruals, there are two major types of accruals you are likely to come across when auditing. The first accruals are the ones that relate to payroll, okay? So you can see most of our accruals is going to be relating to like wages, vacation, other payroll, okay? So that is usually the biggest part of accruals when you're auditing. The other part of accrual is likely to be utilities, okay, like electricity, water bills. Those are some other accrual you might come across, or professional fees, okay? But most times the accrual is going to be relating to things like wages and payroll. Like, you know, in your working paper you have to put the company's name, what you're testing, the year end, and we have our materiality here, okay? If you don't know how to calculate materiality, I have a video on that already. So we're going to set our threshold, okay? And here we have our purpose. I don't want to go through this, but you can just pause the video and read it for yourself. We have the purpose, the procedures, and we're going to establish a threshold, which I already did. So here it was 5%. 5% of materiality. That is our threshold, okay? So what we are going to do, the first thing you want to do when you're auditing your accruals is that you want to perform a variance analysis. So you want to see the accrued expenses this year compared to the previous year. So if your variance is more than your threshold, you have to make a note, or you have to make an explanation, okay? So you can see, let's look at the first one. We have accrued charges, and this accrued charges relates to utilities, okay? It relates to electricity bills. So in the current year, the client has 17,800, and last year they had no accrued charges. So we have to make a note. Why do we have this large variance? And you can see I made a note right here. In my last video, I talked about audit documentation, and that is what I'm doing right here. I'm documenting the discussion I had with the client, okay? And the client told me the reason why they have these accrued charges in the current year, because they are constructing a new hostel, which resulted in higher electricity usage. And you can see I documented my discussion with the client. So what did I do to test this? How did I perform my testing on this? I requested the invoice from the client, okay? The client provided me with the invoice, which was dated after year end, and I agreed the amount on the invoice with what we have on the GL. So on the invoice we have 17,800, and on the GL we have 17,800. So that was my procedure for this, okay? So we really don't need to perform any further work, because what we have on the GL agrees to the invoice. So now let's look at the other accrued expenses, which relates to payroll. So wages, you can see the variance is not up to our threshold of 2,000, okay? So I'm just going to put variance is less than threshold. I don't need to make any explanation on this. So for vacation, the vacation is more than, the variance on the vacation is more than our threshold, okay? So I had to make a note 2. And what does note 2 says? So note 2, I also documented the discussion I had with the client. Can you see? So the client told me that the reason for the increase in vacation is because there were more staff taking vacation close to year end, okay, which resulted in more accrued expenses. So you always have to put your documentation so that when somebody comes into your working paper, they know what you discussed with the client, okay? So there we have it. And when we look at the other payroll, you can see our variance is not up to $2,000. So I'm just going to put variance is less than threshold. So once you're done with the variance analysis, the next thing you want to do, you can see for this one, I already agreed it to the invoice because it relates to utilities. But for these ones, we don't have invoice. So what are we going to agree these ones to? We are going to agree it to the payroll report. Okay, so let's see how we do that. So this is another aspect of the testing. So here we are going to obtain the payroll report, okay, because there's no invoice for payroll. So we are going to get the payroll report for the last payroll period in the financial year that we are auditing, and also the payroll reports for the following financial year, which is 2022. Okay, so we're going to see how to do that right here. So for this client, in the period ending December 15, 2021, that was the pay period before the last one. Okay, so the last pay period was December 31, 2021. That was the last pay period. But remember, the pay period is not usually the same day the payment is made. Okay, for this client, the last pay period was December 31, 2021, but they made the payment January 14, 2022. Okay, so that means the client is supposed to have accrued from December, because the last pay period before December 31st was December 15th. I hope you're following me. So the client is supposed to accrue from December 15th to December 31st. Okay, and when you count the number of days from December 15th to December 31st, you're going to have 16 days. Okay, so the client is supposed to accrue 16 over 16. That's a total of 100%, because it wasn't paid until the financial year 2022. So once you have that, what are you going to do next? So you're going to put the GL here, the pay period, and then we obtained the payroll report. Okay, and when we got the payroll report, we took the amount we have on the payroll report right here, and this is what the client has on their GL. So we, as the auditors, we are going to perform our recalculation right here. So how are we going to perform our recalculation? So we know that the client should accrue 100%, okay, for that particular pay period. So what are we going to do? We are going to multiply the percentage that they should accrue. We're going to multiply it by what we have on the payroll report. Okay, so when we multiply this by this, we are going to get this. Okay, this will be our accrual recalculation. So the client is showing this amount in their GL, but when we did our recalculation, this is what we have. So there's a difference of this amount. Okay, and we're also going to do the same thing for this one. So when we picked up the payroll reports, this is what we had for December 15 to December 31st. And according to the number of days, it shows that the client should accrue 100%. Okay, 100%. So 100 times this will give us the same amount. So in this case, we have the same amount as the client. There's no difference. So in the last one, the other payroll, so the payroll report shows $10,100, and when we multiply 100 by this, we have 10,100, but the client has this amount in their GL, so we also have a difference. So we're going to sum up the total difference we have. Okay, and when you sum it up, the total difference is just $250, and this is trivial. Okay, and when we say trivial, is below materiality. Okay, so we don't have to bother too much about this amount. Okay, because as you can see in the first working paper, our materiality is 40,000. Okay, and trivial is 2,000. So because this amount is below trivial, is below $2,000, we are just going to say trivial. We don't have to perform any further work. Okay, so basically this is how you audit accruals. If the accrual is relating to like utility bills, professional fees, you just need to agree the amount to the invoice. Okay, that is what you most likely do. But if it's relating to payroll, you have to do your variance analysis first, and after your variance analysis, you have to agree it to the payroll report. Okay, depending on the number of days that was accrued. If it was 15 days that should have been accrued, you're going to do that and then perform your recalculation. Okay, and then compare it to what the client has on their GL, and then you note any difference. So this is the video for today. Thank you very much for watching. If you have any question regarding this, please put it in the comment section and I'll be happy to help you. See you in the next video and bye.